All right, so today I'm going to be talking about trading springs and upthrusts in a mechanical countertrend strategy. So this is to keep in spirit with last month's video. I talked about trading double and triple algorithms, also mechanically. With these strategies, we're not looking for a high amount of confluence. We're just looking at some simple rules that are easy to follow and to achieve consistent results. So that's the goal of this. And so the rules and the exit strategies are adapted for simplicity. So let's go through the rules quickly. And the first one is that it must be a spring or upthrust, right? We can use these semi-automated alerts that I presented in January's webinar. That can be applied to NinjaTrader, TradingView, and Sierra Chart. Second rule is algo filter needs to be set to countertrend, and I'll show how to do this. It's very easy. 3, the price must break the previous swing high or low. So in a sense, it's even simpler than the last mechanical trading strategy in a way, because that one looked for what the previous swing demand and supply was. Here we are not. Once again, we're trading only between 9:30 a.m. and 12 p.m. This is not because that's the only time to trade. It's just those are the hours that I like to trade, but people are welcome to apply this strategy to other hours, and people have been doing that with the other strategy as well. The exit strategy we're going to use is very simple, risk reward to 1 to 1. Usually I talk about going for a higher reward to the risk, but this is a mechanical counter trend strategy. Focus being on the counter trend part of it. So we're going to try to maximize the win ratio for this strategy. And we're going to ride the trade until the stop or profit is hit, even if it goes past 12 p.m. So if we get in a trade before 12 p.m. and we still haven't hit the stop or profit, we're going to continue to hold until that stop or profit is hit. So I'm going to be looking at a full week like we did last time. I'm going to be looking at last week, March the 3rd till March the 8th. So that's Monday through Friday of last week. And last time I looked at ES, Dow Jones, and Nasdaq. This time I'm going to add Russell, crude oil, and gold to show more data. Here again, I have the rules and the exit strategies, and off we go to get started. So we're looking at the E-mini S&P here. I'm using the 1-minute charts solely, and I've highlighted this background 9:30 to 12. I showed how to do this in my last video. So the requirement for this is you're going to want to go into your Gann swing indicator. For TradingView, you're going to go into MBoxAlgos, since the algos are in a separate indicator for TradingView. And what we're going to do is we're going to turn all the algos off except for springs, and upthrust is going to be on, and the filter is the counter trend, right? Which we're attempting to catch counter trend trades. All right, so that's fine. So we're going to start here, and I'm going to start recording the data, and we're going to try to get through this. So we go through the whole trading day. See, we have the first spring here. It did not break the previous swing highs. No trade. This spring, it breaks the previous swing high, and we have a trade. All right, so let's record this. We're going to place the stop here. Our entrance is as we break, and we're going for a risk reward of 1. Okay, so that was easily hit right here. I'm not even looking at any of the other technical analysis. We can always optimize to go for longer moves, but this is a mechanical strategy which I'm presenting. So we made 13 ticks. So that's March 4th. ES. So we got 1 win, and we made 13 ticks. I want to move this to get this. Let's do that. Yeah. So make more room for our statistics. Okay. Off we go. So this got kind of closer to our closing time. Let's go to March the 5th. Okay, there's one spring here. It didn't break the previous high. It's a no trade. So this is a no trade day, the 5th. So I'll just leave it blank on days there's no trades. Let's continue. Okay, so we've got an upthrust here. Neither broke the previous swing high, so we're not in a trade. So you see that because last strategy we had any double algorithm, right? Here we're only doing springs and upthrusts in a counter trend, so it's a more specific strategy, and as a result we're going to have less trades. But the point and the goal is consistency. That's what matters. March the 7th, we had an upthrust, didn't break the previous swing. It's a no trade. Okay, this is Friday, March the 8th, and yes, indeed, we have a trade. We got this nice upthrust, and we've got the stop here, entrance as it breaks here, and we're going for that risk reward of 1, which is low. But this is, I'm presenting a mechanical strategy, right? So if we're looking at the technical analysis, and if I was trading, I'd be looking at, expansion here. The X pace is going. We've got all these X control dots, and I would, squeeze more out of this trade. But we're doing mechanical here, so it's a 1-to-1, and we made 37 ticks on March the 8th. So that's a win, and we made 37 ticks. So total trades for ES is going to be 2. Total profit, we have 13 plus 37. Going to be 50 ticks. Win ratio, 100%. All right. Now let's move on to the Dow Jones. So March the 4th, Monday, we had an upthrust here. It did not break the previous swing low, no trade. Next day, Tuesday, there's no springs upthrust, no trades. Here we had an upthrust, did not break the previous swing, no trade. Here we've got Thursday, no trade. So see, for Dow Jones, we're not really getting much so far until Friday. So here we got the upthrust, did not break previous swing, no trade. Here it does. So here we're going to calculate our risk reward. Here's our stop. That's where it would have entered, and risk reward to 1. 43 ticks. Okay, so we would have hit that as price broke down here, right? And so here we can see that this high, if we want to confirm, 38,941. This high here is 38,938. So this did not break our stop, and we would have gotten out here. Purely mechanical. So we had one trade in the Dow Jones and made 43 ticks. On the last day. 43. It's one trade. 43 ticks. Win ratio is 100%. All right. Let's go to Nasdaq. All right, so we're going to start on Monday, March the 4th. I guess I already had this drawn out. We had this spring here, didn't break that high. This spring didn't break that high. This spring did break the high here, so we got the 1-to-1. We made 103 ticks on this trade. Now we've got an upthrust here. That's also a valid entry according to our rules. Stop, entrance, and we've got the 1-to-1 here. So we've got 103 plus 60 ticks for the day. That's 163 ticks for Nasdaq. We got 2 wins and 163 ticks. All right, let's move on. So we got Tuesday here, and here we have a loss. They're bound to come up. Nothing is perfect, but that's all right. So we stop here, we get in there, and we don't make our one-to-one. That would be up here. So we take the loss here, 145 tick loss. Yeah, Nasdaq is a lot more volatile, so the wins and the losses are going to be bigger than, say, S&P and Dow Jones. So we have, for Tuesday, we have a loss of 145 ticks. We have a lose, 145 ticks. All right, let's do minus. Okay, let's move on. Wednesday. All right, Wednesday we got, we do have an entrance here. We got the Upthrust. And so the stop would be here, the entrance would be here, and our risk to reward to the 1. Can I get, it wants to be 1.1, 0.99, 1.01. So we know it's 140, so this would be 140 profit right here for March the 6th. It's got a win, 140 profit. So again, this is mechanical, but you know, if I was looking at the analysis, you know, you could definitely, you know, a 2-to-1, this would have worked out, right? If you look at the technical analysis side of things, you see we have expansion of from minus 32 to minus 13. Demand drops 227, 122. You know, there's could be more to squeeze out of this trade if we're not doing purely mechanical. So we've got Thursday. This doesn't break the previous swing. This upthrust doesn't break. No trade. And we've got Friday. Friday we got their spring here. That's going to be valid. So that's our stop. That's our entrance. And here's our 1. So we see that, yes, we do hit the profit. And we did, it says risk reward 1, but the stop and target is 1 tick off. It's funny. So I'll put 267 and it's a win. 267 and it's a win. So we did a total of 4 trades. No, sorry, 5 trades, because we got that loss here. So we won 4 out of 5. So we had an 80% win ratio here. And the total profit loss would be equals sum of this, 425. All right, so even though we had a loss, we did pretty good with the Nasdaq. Now let's look at the Russell. So the Russell starts here. I guess this signal happened right at 9:30. According to the rules, I guess we would take it, but it did not break the previous swing, so it's a no trade. This upthrust doesn't break the previous swing, it's a no trade. Let's go to the next day. There's no signals at all. It's a no trade day. Let's look at the 6th. Here it didn't break. Here it does. So here we do have a trade on March the 6th. So here's going to be our stop. entrance and get to that 1 right there. So this was a 27 ticks on March the 6th is a win. 27 ticks. All right, let's keep going. There's no signals on this day, so it's a no trade day. Let's look at the 8th. 8th looks pretty good. We had the upthrust here. So we would have entered here, and we would have gone for the 1-to-1 here, 101 ticks. Okay, so that did pretty good. And, you know, somebody was asking about, you know, say you have like this big wave 354. So if I was looking at technical analysis, one thing I would notice is that the buying by the end of this wave, it really drops significantly, you know. But we're doing purely mechanical here, so 101 ticks on March the 8th. We'll take it. 101. Got another win. Total trades 2. Win ratio was our 100% here. And we've got 128 ticks here. Oil. So crude oil and gold. So these markets are, you know, move differently than the index ones. So we'll see how it did here. So we had the spring here, didn't break previous high, no trade. March the 5th. Here we're at Upthrust. And we are in the trade. So that's our entrance, and we're going to the 1-to-1, 36 ticks on March the 5th. March the 5th, 36 ticks. It's a win. All right. All right, March 6th. This upthrust did not break. This didn't break, so those are no trades. This spring didn't break. This spring looks awfully close. Let's check the highs. This high is 80.14. This high is 80.14. So it was a tick off from entering. It needs to break the previous swing high to enter. So this is not a trade. Again, this is purely mechanical, so I'm not picking and choosing, just following the rules that we set for this strategy and living or dying by them. So this one, this is going to be a loss right here. Our stop is here. We get in here, and it's 25 tick loss. So this is March 7th, 25 loss. March 7th, 20 minus 25. All right. And here we've got so this happened a minute before the open, so it doesn't fall within our time frame. This one is going to trigger. That's our stop. That's our entrance, and we're going for that 1-to-1, 28 ticks on March the 8th. 28 on the 8th. 28th on the 8th. I'm sorry, this was not a win. Why did I put win there? That was a lose. For that minus 25, that was that previous day. I guess I slipped that, but let's just take a look at that. Yes, this was a 25 loss on March the 7th. 25 tick loss March 7th. I accidentally put win, but okay, so we've got total trades of 3. Win ratio, we've got 2 out of 3, so I guess that, you know, 66.67% here. And the profit loss sum equals this. So we still made 39 ticks. That's all right. So let's do gold now, the last one. Look at March the 4th, no trade. March the 5th, no trade because this didn't break the previous swing high. No signals here. So far, gold's got nothing. Here we have a trade. So this upthrust breaks the previous swing low, so we're in this trade. That's our entrance, and here's our 30 tick 1-to-1. So March 7th, 30 ticks. March 7th, 30 ticks. Yep. Let's move on. And we've got March the 8th. And I guess here we don't have any trades. So let me check quickly, make sure we didn't miss anything. So we only had one trade for the week in gold. No springs, no upthrust there. Yeah, that's just the way it is. So gold, we didn't see much action. We had one trade, 30, and a win ratio of 100%. So, I mean, overall win ratio, we could, suppose we could calculate this. That would be, you know, 1, 2, 3. So we got 100 plus 100 plus 80 plus 100 plus 66.67 plus 100 divided by 6. So we got it 76% win ratio. So that's pretty good. Total for the week, well, you know, the tick values are different for different instruments, but if we want to count how many ticks we've got, that'd be a good one because so total profit loss. So we got 50 plus 43 plus 50 plus 43 plus 425 on the Nasdaq plus 128 on the RTY plus 39 on the crude and plus 30. So we got 715. So, you know, we can convert that into a monetary amount, but you'll need to compute, you know, the value per tick, but you know, that's pretty good. So basically we made 715 ticks with a 76% win ratio, trading this mechanical spring upthrust strategy. And you know, this video I wanted to add those extra ones, RTY, CL, GC, because people have been asking, well, what about the other markets? You know, I mean, we can see that the most volatile NQ, it did the most, right? It's the most volatile. It's just the way it is. And gold, we didn't have much action on it, right? So we had more action basically across the index markets, is S&P, Dow Jones, and Nasdaq than these, just because there's more volatility in these. And remember, this strategy is a very specific strategy, so we would not expect that there would be a lot of trades of this. But what I wanted to show is that there are many different strategies that can be applied. And along the topics of this mechanical trading, I wanted to present an additional strategy that can be used and that is effective. So I hope you guys enjoyed this video. You know, there's lots of different strategies. I may keep doing these videos. I think people find them very useful, and these are easier to apply. I'm trying to make trading easier for people. But if you can count the points of confluence and look at the technical analysis, then you know there's a lot more to squeeze out of these trades than just purely mechanical. Anyway, that's it for today. Hope you enjoyed the video. I'll catch you next time.